Okay, let's unpack this. If you've been following the world of digital assets, especially Bitcoin, well, the last 24 hours have been, shall we say, a whirlwind. It's like watching a high-speed car chase and then suddenly everyone just hits the brakes, leaves you wondering, what just happened? Today, we're taking a deep dive into the latest Bitcoin market intelligence briefing. It's dated August 15, 2025. Our mission here is really to navigate these recent price swings, understand the powerful forces at play, global economics, big institutional money moves, cutting-edge tech, and help you grasp what's truly shaping this market. It's about finding those crucial nuggets of knowledge that cut through all the noise.
Yeah, and what's fascinating here is precisely how quickly the narrative can shift based on, well, just a little bit of new information. This briefing gives us a perfect snapshot of Bitcoin's dual nature, I suppose. It's clearly maturing as a financial asset, no doubt, yet it's still highly susceptible to these rapid sentiment shifts, just based on a few key data points or comments. So we'll be looking at the market's new price record and then that sharp correction right after, plus the surprising macro data that seemed to trigger it, some really significant institutional actions, and a few groundbreaking developments in the underlying tech and security of the whole ecosystem.
Right. Here's where it gets really interesting and honestly a bit jarring. Just yesterday, Bitcoin hits a new all-time high. What was it? $124,533 in dollars. Briefly surpassed its July record. That felt like quite the euphoric moment. But then, almost as quickly it plunged, stabilized below $119,000, specifically around $118,875.08 after hitting a low of $117,208.97. My first thought was maybe some sudden unexpected regulatory bombshell, but was it something else entirely? What's your read on the primary forces behind both that surge and the violent reversal?
Well, your thought about regulation isn't totally off base for how easily Bitcoin can be swayed, but this time it looks like the main drivers were really macroeconomic. The initial rally, that push upwards, was underpinned by a few strong narratives that had been building up for weeks. You had widespread market expectation of a U.S. Federal Reserve interest rate cut coming in September. That idea got solidified by softer than expected consumer price index, or CPI, data earlier in the week.
Okay, so lower inflation hints meant easier money was coming.
Exactly. That tends to encourage capital to flow into riskier assets, like Bitcoin. Then you had that macroeconomic tailwind, complemented by what seemed like a favorable political environment. The Trump administration's kind of pro-crypto stance, some recent legislative progress, giving a bit more regulatory clarity.
Right, the Genius and Clarity Acts.
Precisely. And finally, you just had that sustained institutional demand, especially through the spot Bitcoin ETFs, just constantly absorbing supply in the background. But like you said, that bullish feeling was really short-lived. The market reversed sharply, catalyzed by two very specific and very quickly interpreted developments. The primary trigger, the big one, was the release of the U.S. Producer Price Index, the PPI, for July. The report showed a monthly increase of 0.9%. That dramatically exceeded the consensus forecasts, which were predicting just 0.2%.
0.9 versus 0.2? Yeah, that's a big miss.
Yeah, a huge miss. And it immediately undermined the central thesis for the whole rally, that imminent Fed rate cut. It just triggered a broad sell-off across risk assets, not just crypto. Compounding that negative shock were initial comments from U.S. Treasury Secretary Scott Bessent. He suggested the government had, quote, no plans to make further Bitcoin purchases for its strategic reserve. Now, he did clarify later it would only be funded by seized assets, but the initial market reaction was sharp.
So perceived withdrawal of support, even if temporary.
Exactly. It raises an important question. Why such an immediate, sharp reaction? It really shows how sensitive Bitcoin currently is to both inflation signals and this perceived government backing.
So the market didn't just correct. You mentioned something called a liquidation cascade. For listeners who might not be familiar, I mean, that sounds pretty intense. We're talking over $1 billion in leveraged positions wiped out. What exactly does that mean for the average trader, and why was it so impactful this time?
You're right. Liquidation cascade sounds brutal, and frankly it is. Imagine a scenario where lots of traders are betting Bitcoin's price will go up, but they're using borrowed money that's leverage. They put up a small bit of their own capital, borrow the rest. If the price goes down instead, sharply, and hits a certain point, their positions get automatically closed or liquidated by the exchange. This prevents them from losing more than their initial deposit, but it forces selling.
Okay, forced selling.
Right. And the severity of this correction was amplified precisely because the market was heavily skewed towards these leveraged bullish bets, the long positions. So when the price dropped unexpectedly from the PPI news and Bessent's comments, it triggered automatic selling from those leveraged longs.
That selling pushes the price down further, which triggers more liquidations from other traders who are now underwater. It's a domino effect.
A downward spiral, fueled by leverage.
Exactly. The data tells us over $860 million came from these long positions being liquidated. Compare that to only about $140 million in short positions, people betting on price declines. This huge imbalance clearly shows traders were overextended, betting heavily on the upside, making the market exceptionally vulnerable to any negative surprise. But here's a crucial nuance despite the chaos. Even with this massive deleveraging, the Bitcoin futures annualized premium, that's basically the cost to hold a futures contract, it remained relatively stable, hovering between 5% and 10%.
What does that stability tell us?
It suggests the rally wasn't solely fueled by excessive speculative retail leverage, like maybe we've seen in some past cycles. It points towards a more complex market structure, probably with more sophisticated players involved who weren't quite as leveraged up in the futures market. Also, that rapid recovery you mentioned, from below $118,000 back above $119,000 fairly quickly, that suggests significant dip buying interest.
People stepping in to buy the drop.
Precisely. That price action isn't really consistent with a market in pure panic. It indicates that new, well-capitalized buyers, and I suspect institutional entities with longer-term views, saw the deleveraging event as a strategic buying opportunity. They saw it as a temporary discount, perhaps.
That makes sense. It's clear Bitcoin isn't operating in its own little world anymore. Its price moves are now, well, inextricably tied to these global macroeconomic signals. Let's dig a bit deeper into that producer price index data, because that really seemed to be the catalyst. What were the specifics that caused such a stir, and what does it really imply for the Fed's policy going forward?
Sure. The specifics from the Bureau of Labor Statistics were quite telling. They reported that 0.9% month-over-month increase in wholesale prices. That was the fastest jump like that since May 2022. Annually, the PPI accelerated to 3.3%, which was a significant jump from 2.4% in June. And maybe more importantly, core PPI, which strips out volatile stuff like food and energy, so it's seen as a better indicator of underlying inflation trends that also surged by 0.9% monthly.
Wow, core jumped that much too.
Yes, its largest increase in over 3 years. This undeniably hot data immediately just shattered the market consensus for a September interest rate cut. Before the report, probabilities for a cut were way up there, like 94%, according to the CME FedWatch tool. Almost everyone expected it.
And after the report?
Those expectations basically evaporated, went to near zero very quickly. So the prospect of higher for longer interest rates immediately came back into focus. This increases the opportunity cost of holding non-yielding assets like Bitcoin, because you could potentially earn more in safer interest-bearing assets. And it also typically strengthens the U.S. dollar, which creates another headwind for risk assets, including stocks and crypto. It's kind of a double whammy.
So connecting this to the bigger picture?
Well, Bitcoin is behaving more and more like a traditional long-duration risk asset. Think high-growth tech stocks. It reacted negatively to signals of tighter monetary policy, which confirms its deeper integration into institutional portfolios. They trade it alongside their other risk assets now, but it also challenges that narrative of Bitcoin being a pure short-term inflation hedge, doesn't it? It's sold off because of the high inflation number, but only because that inflation implies a more hawkish central bank, a Fed that will keep rates high to fight the inflation. It's nuanced.
Fascinating. And we saw how incredibly sensitive the market was to Treasury Secretary Bessent's comments, too. Seemed like a bit of back and forth there. What was the complete story, and what insight does that offer into how much of a policy premium, as you called it, is actually baked into Bitcoin's price right now?
Yeah, that was interesting. Secretary Bessent's initial no plans to make further Bitcoin purchases comment, especially for the U.S. Strategic Reserve, definitely caused a shockwave. Why? Because it was interpreted as a direct contradiction of the administration's perceived pro-crypto stance. It sort of dashed those speculative hopes for massive government buying, even if those hopes were maybe unfounded.
But then he clarified.
Yes, later in the day, he clarified that Treasury was, in fact, exploring, quote, budget-neutral options to acquire Bitcoin. He emphasized the first and most crucial step is to halt the government's practice of selling its seized Bitcoin holdings, which are estimated to be worth somewhere between $50 and $20 billion. The idea being they place those into the reserve instead of selling them off. So not actively buying new Bitcoin in the market, but holding on to what they already seize.
Okay. So keeping, not actively acquiring more from the market.
Correct. Yeah. But the market's overreaction to his initial statement, and then its partial calming after the clarification, that really indicates a significant policy premium is currently priced into Bitcoin. It reflects an active expectation, or at least hope, of large-scale government support or maybe just a highly favorable regulatory environment.
But that reliance on policy makes it vulnerable too, right?
Absolutely. It introduces a significant source of vulnerability. If that policy support seems to waver or changes quickly, Bitcoin could see sharp pullbacks, as we just saw. Still, these events are unfolding against a broadly favorable regulatory backdrop under the Trump administration. You mentioned the Genius Act for stablecoins, the Clarity Act for market structure. These do provide much-needed certainty and arguably boost institutional confidence. That's a powerful counterforce.
Definitely. And beyond policy, the smart money just keeps flowing in. That feels like maybe the biggest underlying story. BlackRock, for example, just hit a massive milestone. What exactly are they doing, and what does this signal about the future of the asset class itself?
Indeed. On-chain data analysis, looking at blockchain movements, suggests BlackRock's crypto holdings have now surpassed $104 billion. I mean, that figure alone really underscores the depth of commitment from the world's largest asset manager. It's not trivial. And while Bitcoin still dominates their portfolio around $89.27 billion, which it's about 743,310 BTC, according to the briefing, a deeper look reveals a really significant strategic pivot that maybe doesn't get enough attention.
Okay, what's the pivot?
It's their Ethereum holdings. They've grown at an explosive rate. BlackRock now holds about 3.2 million ETH, valued at around $14.71 billion. That represents a staggering 309% increase in the US dollar value of its ETH position just since January.
Wow, 309% increase in ETH value. Hell.
Yeah. This aggressive accumulation of Ethereum, I think, isn't just simple diversification. It might be the clearest signal yet that the world's largest asset manager views ETH as critical infrastructure for the next phase of institutional crypto adoption. They seem to be moving beyond just Bitcoin as a store of value.
So seeing value in Ethereum's utility, programmability.
Exactly. This pivot fundamentally sort of de-risks Ethereum for other large players and suggests a future where institutional portfolios will likely be significantly more diversified within crypto itself. It's a conviction bet, I'd say, on the infrastructure layer of this whole blockchain economy. Now, if we look at the ETF dynamics during that sell-off, the spot Bitcoin ETFs did see about $292.9 million in net outflows.
So money came out.
Yes, which indicates that while they are crucial on-ramps for long-term strategic capital, they also serve as highly liquid off-ramps for more tactical traders during volatility. People use them to get out quickly, too. But the longer-term trend of accumulation still seems evident. You see disclosures like Harvard University's endowment revealing a $117 million allocation to BlackRock's IBIT ETF. That's significant long-term capital.
Right, endowments aren't typically short-term traders.
Precisely. And beyond ETFs, corporate treasury adoption keeps gaining momentum. Companies like Sequence planning to acquire 100,000 BTC by 2030. World Liberty Financial establishing a $1.5 billion crypto treasury. They're making Bitcoin a core part of their balance sheet strategy. We're also seeing significant M&A activity. Nakamoto, led by Trump advisor David Bailey, merged with Kindly MD to form a new public Bitcoin treasury company. And bullish parent of the Bullish Exchange and CoinDesk surged over 200% in its NYSE debut. Strong public market interest in crypto-adjacent businesses.
It's clear that while prices and policies grab the headlines day to day, the underlying technology and the ecosystem are constantly evolving, kind of quietly shaping the future. What are some of the key developments that you're seeing shaping the future of, say, Bitcoin mining and security right now?
That's a great point. The Bitcoin mining industry especially is undergoing a pretty strategic maturation. It's driven by tech innovation and also a shifting geopolitical landscape. A key development is the unveiling of the Proto Rig by Jack Dorsey's blog. Their goal is ambitious: engineer mining rigs with a 10-year operational life cycle.
10 years? That's a lot longer than current rigs last, isn't it?
Oh yeah, it's a stark contrast to the current model, which is more like 3-5 years before they become obsolete or inefficient. It's almost a disposable asset model now. Block's rig has a modular design, letting you swap components. They estimate this could reduce upgrade costs by 15-20% per cycle. The first air-cooled model boasts an impressive 800 terahashes per second. That's its processing power.
800 THs, very high.
Very high.
Yeah.
And its efficiency is 14.1 joules per terahash. So it does that work using significantly less energy per computation. That's huge for profitability and sustainability.
Yeah.
Block's entry is also significant just because of its geography. It's a U.S.-based company challenging the long-standing dominance of Chinese manufacturers like Bitmain and MicroBT. And this comes at a critical time, with escalating trade tariffs, including a 30% tariff on Chinese-made rigs, forcing a kind of strategic realignment.
So the tariffs are pushing manufacturing out of China.
It seems so. In response, Chinese giants like Bitmain are actively planning to establish manufacturing facilities in the United States. Bitmain announced a factory in Texas or Florida, supposed to be operational by Q3, hiring about 250 local employees. This reshoring of production aims to get around tariffs, reduce supply chain risks, and importantly, it decentralizes hardware production, could even create domestic jobs. Now, while those are immediate market and industry factors, experts continue to flag a more distant but potentially, well, existential threat to Bitcoin security: quantum computing.
Ah, yes, the quantum threat. Still feels far off, but
It does. But a cybersecurity expert recently highlighted the risk of what's called a harvest now, decrypt later attack. The scenario is, adversaries could be recording encrypted blockchain data today, just storing it, with the intention of using a sufficiently powerful quantum computer, maybe years or decades from now, to break the elliptic curve cryptography that secures Bitcoin transactions. You know, the math that keeps everything safe.
so they capture the data now, hoping to crack it later when the tech exists.
Exactly. While it's not immediate, it represents a fundamental tail risk that is likely underpriced by the market right now. As institutional adoption deepens, especially from very conservative entities with multi-decade investment horizons, think pension funds, ensures the demand for a clear, credible roadmap to quantum-resistant cryptography will grow. The absence of a formalized plan could eventually become a significant barrier to that next, perhaps even bigger tier of institutional investment. They need long-term certainty. And finally, just a stark reminder of the persistent operational risks within the crypto ecosystem came from Turkey recently. The exchange BtcTurk abruptly halted withdrawals. They cited a technical issue. But then, on-chain security firms flagged suspicious transfers out of the exchange's known wallets, totaling somewhere between $48 million and $50 million, raises strong suspicions of a major security breach or hack.
Oof. Yeah, not just technical issues then.
Probably not. This incident just highlights the critical importance of counterparty risk assessment and secure custody. These issues remain right at the forefront for both retail and institutional investors. You need to trust who holds your assets.
So what does this all mean for us looking at the last 24 hours? It really encapsulated Bitcoin's current stage, didn't it? You have this powerful, long-term structural bull trend driven largely by that increasing institutional adoption we talked about. But it's clashing almost daily with these immediate headwinds of macroeconomic uncertainty and clearly policy sensitivity.
Yeah, it's definitely at a crossroads. Monetary policy from the Federal Reserve remains the dominant short-term price driver. That much is clear from the PPI reaction. And we've seen this clear divergence. Short-term leveraged traders getting flushed out in cascades.
While the long-term institutional accumulators, like BlackRock, seem to continue their strategic moves, even diversifying into Ethereum now.
Looking forward, if we connect this to the bigger picture, there are a few key factors you should probably monitor pretty vigilantly. First, obviously, U.S. economic data. Upcoming employment reports, more inflation reports, they will heavily shape Fed policy expectations and therefore market sentiment.
Right. All eyes on the Fed still.
Absolutely. Second, those daily ETF flows. They become a crucial, almost real-time proxy for sentiment. Sustained inflows would be bullish, continued outflows would signal caution. Third, keep an ear out for U.S. Treasury and White House commentary. The market's extreme sensitivity means any further clarity or maybe confusion on the U.S. Strategic Bitcoin Reserve or broader crypto policy will likely have a significant impact.
That policy premium is real.
It certainly seems to be. And fourth, just watch Bitcoin price action around that $120,000 level. It feels like a critical psychological and technical battleground now. A sustained move above or below will likely dictate the near-term direction.
This whole deep dive really shows us that Bitcoin isn't just a digital currency anymore, is it? It's this living, breathing financial asset wrestling with its identity, somewhere between a speculative instrument, highly susceptible to news flashes, and a maturing institutional player trying to find its footing in the global financial system. So the question for you, as you think about all this, is where do you think its true strength lies as these powerful forces continue to pull in different directions?